we go. Okay, excellent. Well, welcome. It is April 14th, Monday, and today is a very interesting Monday, as usual, because we had some fun, Sunday fun day, random pump and dumps as usual. It wouldn't be crypto without some good pump and dumps. But one of the things I mentioned in my channel, I think a while ago, not a while ago, last week, yeah, Friday roughly, was this little poi here, right under 5.3. We broke back under, right? Even if we consolidate, I don't even know if we're going to consolidate too much, but I closed most of my longs to risk manage, which is fine. I'm not too worried. We'll catch more, but I am basically tracking a new scenario, slightly new, maybe slightly new, slightly old. But this range we did not hold above right here. I'll draw this with the brush here. We did not hold above here, which would have been the bearish scenario, right? So really, what do we want to look for? We want to look for very short-term longs, short-term by short duration, right? Because effectively what I'm seeing is going to be some sort of pump now that we're back in range here, some sort of pump that's going to bring us back down to 4.12. And if we do not close under 4.12 on the daily, then it's going to start looking like very, very bad news. Because, well, good news and bad news, I guess, is kind of, to put it simply, is because as I mentioned before, the quarterly here, we have one more quarterly sweep. We have not swept up at 6.8 and then 7. So this year, mark my words, this year, sometime this year, I don't know exactly when, it's going to be probably maybe this quarter or next, I'm going to say probably by the fall, right? By the last quarter of the year. I wouldn't see it taking that long, but by like November, we're going to see probably a huge capitulation wick, massive, massive, massive sell-off all the way up to 7.5. I don't know what's going to happen. I don't know what news it's going to be, but it is going to happen this year. All this means is now it's just slightly delayed. I wanted it to happen sooner, but it's just slightly delayed. But really, what we're looking at now is short-term longs into 4.5 to 4.12. Once we get to that range, we have to watch this range because that'll be, the key area by which, if we are able to consolidate underneath it, then great, we'll keep pumping and then we'll keep going down. But I don't know, I just have this sinking feeling, call it sinking feeling, that there's going to be a liquidation wick before we really see a real bull run. And whatever pump we have now should be faded, right? So one of the first things I'm noticing with Solana is, and Solana specifically, more than anything else, is because we have a relative equal high that's been taken 4 times. We have 1, 2, 3, and then the 4th high. So not only have we taken it 4 times, we also have relative equals that have also been taken, and we have a quarterly close back in range. To me, this is insanely bearish, insanely. But it's bearish on the high time frame. Now, what does that mean? That means that with the bias of short-term longs, we do not have enough long liquidity built up before we can see a major move down. So I picked up a very, very, very tiny, super, super tiny Sol short here. But to be honest, I fully expect it to kind of do something where we wobble. There's really two cases here. We have this weekly, which is the problem right now. We just took this weekly. We have an SMR here that's actually supported. So we could do one of two things. We can have a scam pump that only leads us to like 140 and then just absolutely fucking tanks. And I'll tell you that the quarterly here brings us back down to like 20, roughly. Yeah, this has structure all the way down to 20, right? There's the range low, 30, 35. So that's one. But the problem with this is it's kind of very short term, right? So if we are unable to make a new high at above 148 on the daily, then this is orange is gonna play out. And maybe I'll clean this up a little bit, right? Something like this, right? Something like that. We have some sort of small pump here, some sort of fake out pump, right? Because we're going to be back at range lows, but the quarterly will play out and will just drag us right back down to 35. However, if we're able to consolidate above 134, my position is small enough that I can just either keep adding or I can cut and then adjust my cost basis upwards as we drag price up. So I want to continue my short exposure as we drag price up, because even if we do drag up, we're going to drag up to the highest of the range here. There's like three spots. There's really this one, or there's this one here, right at 165, and then we go down, and I'll put this in yellow, right? Or there's the final one, which I don't kind of doubt will happen, but is perfectly valid. We go all the way, manipulate all the way up really, really fast to like 250, and then close back below before going back down to 50, so 50 to 30. So something like this. Every scenario I've already prepared for this short. If I go up, if price goes up and I'm still in this short, based on my risk management, I will only be down, I think 4.5% on my account, even though my average is right now here on blue, roughly. It's like 130 to 137 or something. It's like I'm right in blue roughly. But basically the plan is either we short from this range in yellow, we short from this range in blue, or we hold the short from this current range. In all three scenarios, I'm coming out with a profit. Okay, even though it might not be heavy profits, I fully expect to either drag this price up and then risk off and then alter my cost basis upwards, or we just hold it as is, and then when we start making closures under previous range at 125, I'll start adding, right? I'll start adding to the position, because then orange will be the one that plays out. Because this is kind of one of those things that we have like such smooth liquidity right here that's been untapped. We've only tapped like the one right here, which is 195. So like right there, right? So that's the orange. Everything underneath that, this is gonna be taken. It's just a matter of time. Okay, yeah. So to answer some questions here, let's see. Yes, USDT. Yeah, sorry, I was mentioning USDT briefly. I'll reflect on that again. I think we have a short-term bias for longs, but very cautious longs, very cautious. We either need to have incredibly tight stops, or you need to have incredibly wide stops. This is not heavy longing markets. I think even if we do pump into this lower range, it's going to be something we have to fade. You have to short. Because this quarterly is going to play out, right? We have quarterly. So Hari, to answer your question, how do I get this vision? Years and years of practicing candle range theory and quarterly theory. So I do run mentorships. Happy to let you know if you DM me if you're curious. But simple answer is years and years of practicing CRT. So that is USDT. I'll do Bitcoin. And then Ethereum is a little iffy, but also meh. We have the biggest thing with Bitcoin here is this liquidity in underneath 75. This weekly is still, I don't like Bitcoin as much I just don't like it as much for a short structure because of where we are on this range. I know I have lots of lines here, so apologies on that. I'll clean this up just a little bit. But really, what we want, probably what I'd like to see is like an extension possibly into 94 between the two teal levels, right? But again, this structure is just not, it's not like how do I even say it? Even if we do pump, right? Even if we pump here, I'm still bearish, right? Still bearish right here, because this is going to just bring us right back down again. I want to see, one more major capitulation wick before we start to see real high time frame bullish movement. So Bitcoin, very, very bearish on still. Same thing with Bitcoin dominance. As I mentioned to you guys, long for millions of times. I closed all my alt longs for the purposes of the fact that we are on this range high. We have 3 ranges that we've already broken. We have never tapped this OTE. We've never tapped this. So I'm saying the next low that we will see on altcoins is probably the lowest price you will ever see on altcoins in your lifetime, because the rejection, I will just keep repeating it and drilling it into you guys' heads, because when we see the next capitulation wick, when we see the next pullback, that should be the time we basically go full port. Jokingly full port. I don't really actually mean full port. Always practice risk management, but jokingly, we should be picking up as much exposure to your favorite coins as possible, right? But you should be doing it based on the structure that you look at, right? You can just don't do it blindly, right? Never do things blindly. But really, what we want to look for is one more retracement to wick through this range, tap 65, 67, and then start to go heavy on longs, okay? Because that break of this range will bring us into possibly a 3-year bull run cycle for altcoins. 3 years, right? And these bars have been measured out. You see, 2028, March of 2028 is roughly when the quarterly will complete its cycle. So that'll be when we look to sell altcoins. Cool. So any questions so far? Altcoin to collect when bottoming has come. Yes, I will post the ones I pick up. There's quite a few. There's like Myro, I have a vendetta for. But like literally, so there's like Myro is one of them. Myro has not had a second extension yet. So really, if we go based on the quarterly for Myro, we break this range, we close back in. What's going to happen is we're going to see a standard deviation extension from the quarterly range. So as simple as Myro target price of upwards of $1.50, right? That's our sell target. So roughly on the quarterly here, the same thing is going to happen. This monthly is going to play out. We're going to close into range. We're going to wick through this low. We have not done this yet. This range is too close, right? This is bearish. This range is too close to wick through. I could do limits. I'm actually not going to do limits on this one, but basically one of the things here is we want to see a slight pump and then a very, very aggressive wick sell to crush every single long on this range. Once we do that, once every single long has been liquidated from this range, then and only then we will go in and full port after the range closure back into 10 cents, because that will complete the AMD cycle and our target price will be all the way up. I'll range this up. All the way up at above $1, right? That's 153 RR. Name any analyst in the world you've seen that can give you the RR I can give you. None, period. So this is I'm giving you this one. This is probably all you need is one or two, right? So here's one. I'll give you another one. Sorry. Oh, sorry. I'm getting a phone call. So another one is Yearn. Oh yeah, spot futures, whatever you want to do, Yes, and Skystar, I will mention the risk sizing. I'll make sure I'll mention that in the stream as well. So give me a couple minutes. I'll get to that as well. Um, so let me first explain to you something. I will give you a little bit of a sneak preview here, right? Let's look at a chart. Let's look at the past, right? Let's look at the past to determine the future. Here is Link, right? Here is Link back in 2023. What do we see? We see a weekly accumulation range with a range high and a range low. And then what else do we see? We see the range low broken and then closures back in. Look at that, right? Closures right back in. Now, this is an accumulation. What happened after that? I'll zoom out. We had roughly a 3 to 500% move. 3 to 500% move on Link from that accumulation. Okay? Now, let's go to Yearn. What do we see here? We see a weekly accumulation with a range high and a range low. Do you notice anything similar? It's quite easy to spot the obvious difference, the similarity, right? Because as soon as we break this low, what's going to happen? We're going to close back into the weekly range. We're going to consolidate again. And then let's do a quick measurement. Price range from range low to 400%, at least. That lands us to roughly 27K. But I'll even go one step further. On this weekly, if we start to close in this weekly range, this is the opening range right here, right? What the same thing is going to happen. This is going to be treated as the weekly and the monthly accumulation for this cycle. So we do 400% from this cycle, right? That leads us to a new all-time high, right? So there's our targets. Simple, easy peasy, lemon squeezy. So roughly for Yearn, what we're going to do is we're going to wait for the weekly break of this range. I already have limits. I posted these limits to you guys. Hopefully you still have them. I'm sizing for 0. I expect this play to fill, either go really deep red for a little bit of time or go green almost immediately. And then as soon as it does, and I posted these limits to you guys, so if you're not paying attention, that's on you. So one of the things here is we break this range, we close back in. As soon as we close back in, you see I have an alert here. I'm going to basically quadruple my position. Maybe 10x, because that's confirmation of this quarterly shift, because the next all-time high will be almost guaranteed at that point. Okay, and then we're going to ride it all the way up, basically just adding to the position, not TPing anything at all. Probably maybe once we get to 15 to 27, right? 15 to 27, that's good TPs, and then continuing up. Red line is SL0, right? Size for 0, meaning do not sell, right? Do not close the position. So make sure you don't get liquidated. Make sure you're sizing correctly. Make sure you're not doing X500. Make sure you're doing X10 or X5. Something small enough where you get filled. It doesn't, honestly, guys, you really don't need to do much. You can just do 1%. All you need is 1% at X5, and you're going to be making quadruple your portfolio with the 1%. Okay, really, you do not need much. So a lot of people who trade futures trade to gamble. Like, I don't trade to gamble, guys. We trade to make money. So we're not trying to do X50 and X500 here. All you need is like X5 to X10, maybe X20 for a lot of trades. Anything above that, like, can be a little bit of a noisy. I mean, a little bit of gambling, sure, but there's a fine line between trading and gambling. And you know what that line is? It's called risk management. Cool. So let me explain. On the note of risk management, Skystar had a great question concerning risk management, and also Hari, you guys make very, very great points. I will just leave this chart up for now, but I will talk and explain through some of the characteristics of what it means to properly position size. No one really teaches you these things. I'll teach you these things. It's very simple. I put in already in my Ask Cipher channel the position sizing guide, and take a look at that if you haven't, read through it, but I'll kind of walk you through it verbally. There's effectively two ways to enter a position, whether it's a market order or a limit order. If you are entering a position with a market order and you want to say risk size, there's really two ways to size your position, because a lot of people, when they enter something, they'll enter it with like, oh, I'm going to put in, $100 USDT, flat, static, right? That doesn't, that honestly is not, in my mind, that is like the absolute worst thing to do. It's almost like mentally, I'll give you a metaphor. It's almost like you have a bow and arrow, right? And you're trying to shoot a target. And you're like, I want to get that target right there. It's almost like putting a blindfold on yourself and trying to shoot that arrow, right? Only put the blindfold on and just like blindly position your, size your position based on a static amount, unless that static amount is purposefully set based on one of two things: either your account size, so you're sizing correctly, or your risk size. So when I say risk size, and this is where a lot of people don't realize, when I say risk size, I do not mean 1% of your portfolio, right? And I'll give you an example. So like, for example, this is what you're in finance play. Let's say I'm going to give you, just for example purposes, let's pick a random SL here. I'll do like, I don't know, 2K or 2K. So let's say we were going to do this play, and we were going to use I'm going to give a very specific name here. I'm going to call it a risk anchor. Okay. If we are sizing based off of risk, and you are using a risk anchor, which is different than an SL, the purpose of it is to give you a level by which you know how much you are willing to lose if that level on the chart hits. If price hits that level, how much would you be in the negative, right? And from that, you have to determine what your sizing is, right? And when it comes to sizing, all leverage is an illusion, because all it really is its margin times leverage is equal to the risk here. So I'll put this in white here. So when you're talking about risk sizing, what you take margin times leverage to get your risk, which means that if you put in $10 at 10x, that is going to equal $100 of risk, right? Effectively, if you're from that stop. But that's the same thing as putting $100 at 1x, right? It's the exact same equation. So when you think about it, all risk sizing leverage has no factor. Leverage just has one factor in the variable in the equation, right? So you could put in $10 at 10x or $100 at 1x, and you will basically have the exact same risk. Doesn't matter, right? If you're using it based off of that level. Now, what's interesting too is, think about it this way. Imagine our entry is blue, which is 3367. I'll delete that one for now. Now the question is, if we size based on risk from here, and let's say we have a $100 account, and you say risk is equal to 1%. What does that mean? Well, that means that when we are at 2K, after 3367 is entered, then all that means is that we will be negative $1 on the account, right? So that means if price goes to our entry, fills us, we have a position. If you sized based off your risk, then even if price goes down to 2K, your account will only be negative $1, right? That's simple math, guys. Now, to determine that, you have to bracket your order. So when you enter on the limit order, you would set a limit bracket, and I posted that on my channel as well. And you can then tweak the variables. You tweak your margin and you tweak your leverage until your bracket order matches the risk amount that I specified or that you're looking for. It doesn't need to be me posting. You could be playing your own plays, right? I'm saying. So point being, now here is the risk amount. Now I'm going to give you, and I'll put this in blue, right? If I say to the same exact play, right? Same exact play, we do a $100 account, right? So let's talk about a different scenario. If I say size of 1% at 10x, right? This is a static amount, which is different, and I'll put this in yellow, which is different than the risk amount, and I'll put this in orange, right? So what that would mean is, and actually, you know what? I'll put in the order right now. Give me 1 second. I'm pulling up my futures account, and I will do the math right now. So for Yearn, if we set an order for a static amount at 3364, entering it right now, at 10x, I'll put in 10x here, 1, 2, 3, 4, 5, 10. Oh, I'm sorry, I can't do that. Let's just, I already have a 3x order. So let's say like 5% at 3x. Let's say that, right? So 3334, 3364. If we size it to 5% of my account, oh well, I guess let's do 5% of a $100 account. So 100 would be 1. So 10. Okay, doing some quick math in my head here. 5% at 3x, that would be 2 to 1.3. That would be a size. Okay, so that's looking like 10 sorry, hold on. It seems like everyone wants to message me right now. It's looking like to me it would be 10 contracts, which would be equal to roughly USDT value. What's USDT value? 5, 4, 3. Yeah, it's like $4.5 USDT value. So that would be the order, right? Now checking the bracket loss, which would be, if we were checking the bracket loss on this one at 2,000, that would mean 2,000, you would lose 1.5. Okay, so here we go, 1.3364 is entered. Then our amount would be negative 1.5. And you notice how the difference in numbers, there's a difference there, right? Even though you're sizing slightly differently, you could get the same amount of risk or the same amount of static amount, the same amount of size, but you need to check your bracket order to determine that. And I will tell you the exact leverage, and that's another reason why I specify leverage, and another reason why I specify margin, and another reason why I specify risk, because you can size on any of those variables, and that's how you determine the size of the play. If you are not determining the structure of your play when you set it up, when you make your structure, if you do not know your structure and you're blindly entering statically without any sort of risk anchor, even if it's a stop loss, then you are not trading, right? Unless you know your risk. You need to know your risk. Or if you're like some people I know are able to do that, but they're experts in their field as well. So as long as they know how to risk size, right? If they do not have an actual risk anchor, the point being is you're entering based on your account size, and you know your risk size, and you know how to read price. So that this is like the training wheels. I'm giving you guys training wheels here. So hopefully that's helpful. I know that was a lot. So please ask me any questions if you have. But I can move on to taking some questions with any coins as well. Oh, gas. Oh yeah, gas. Okay. I'll go based on order here. Yes, no problem. And yes, again, you can refer to my guide in my channel if you're curious, and then we'll go from there. So let's look at gas. So gas is pretty fun today. It's already up pretty nicely. But the fun thing with this one is a lot of things lined up really, really, really nice with this one. Um, we have, so 4 hour, we have one more wick here. Um, we could extend a little bit more, uh, but one of the things I will probably de-risk, I might de-risk sooner, right? But one of the fun things about this is that this is a 2 hour and a 3 hour supported bullish delivery. With this expected range, we already had a market structure break at yellow, so 2.893, which means that if price broke this, which it did, I got the alert when it did, when price broke that. If price was not able to take this range, it's going to seek internal, which is right here, right? But what's funny about this is that if we zoom out just a little bit, if we seek internal and we go up to this range at 2.8, depending on the closure here on the daily, what'll end up happening is if we close above the 50% on the daily, the next day close, so tomorrow open, we will get a bearish high of the week. So we're playing the reversal against the bearish high of the week into the IRL for the 8 hour. So 2.9, for example, which is why I'm de-risking about a 2.8. I might do it sooner, but roughly 2.8, 2.9. And then what's even more funny is that if this confirms the range for this range, we're going to be making what's referred to as a seek and destroy model. So this is the first leg of the seek and destroy model. We close above this range on the daily. Tuesday open is going to be, we're going to have a very green Tuesday. The very green Tuesday will lead us right into possible short entries and the TPs for our long, right? So from there, we're going to take the short on the Tuesday high and bring it right back down to OTs for the range low. So that'll be 2.2. I haven't signaled this one yet because we're a little further out, but only if we see the range, only if we see Tuesday be the manipulation high, right? If we see Tuesday be the manipulation high, then this is going to be a very, very clean short, incredibly clean. And then yeah, we'll just play it from there. So hopefully that answers your question. Let's see what else. And yeah, the great news about this, right? The reason why I was able to make the SL so tight is because of what I just mentioned, right? This wick is the high time frame SMR already. So what I did was I anchored the SL on the low time frame SMR, which we already had 3 drives down on. I anchored it right here. And that is completely valid play. So I'm risking only, what is it, like $10, $10 for, what is it, roughly $300 to $400 in gains. So that's how you got to play, right? So hopefully that answers your question. And now, as soon as we start to close above 2.8, I'm going to be de-risk it, and we're going to kind of just write it to the OTEs. Let's see what else. Sorry, give me 1 second. Okay, yes, cool. Okay, so let's look at a few charts, a couple more. SNT. Oh, my caps lock is on. Huh, never even seen this one before. Let's start with quarterly, work our way down. Okay. Give me 1 second, just checking. Yeah, we do have weekly right here. Bearish, weekly bearish. We already took the low. Oops. This is a little weird. Little bit weird. Little bit weird. But I'll say this much. It's not even that bad. Yeah, we are in. Huh. This is not that bad. So what does the weekly look like? Oh yeah, weekly already closed. Interesting. Daily. Got a flat on the 8. No. No. Huh. Yeah, no, this is pretty good. Actually, this is pretty good. Oh yeah, we have flat in the 3. 3, 2, 1, and then we have 4 hour, 8, 12. Nope. Oh, we do. Interesting. Yeah, this was never taken. Was it? No, it was. Okay. We have one next one. Oh, next one's up here. Yep, there we go. Okay, so this is actually not too bad. It's not too bad. So the monthly hasn't closed yet. Weekly, yeah, I want to see. I mean, this is actually not too. It's not too bad from where we are now. I'll clean this up a little bit. Basically, here's our range. So from low, and we took the low, which is good. This is actually pretty nice. This is a pretty nice range here. Effectively, we are people are shorting too much right here. This is going to be pretty explosive. But basically, we're going to have some sort of manipulation down, possibly all the way down to 16. But for now, what I would say is as soon as it starts to close above yellow, what we want to look for is this. We want to see the manipulation down and then a closure above yellow. Once we close above yellow, then this is going to be one of the cleaner plays because we could take it to, what else? Monthly. Is there anything on this? I don't even know if there's anything on this. 8 hour. No, there's something. Was this taken? That was taken. Liquidity was taken there. We have some up here. Not a whole lot, but some liquidity up there and a bunch up here, but that's pretty far. So I would say maybe something like this. Maybe something like this. Want to see some sort of manipulation to the downside first here. It's still a little iffy considering the monthly. So I wouldn't take this one. I would say we want to have closures above. So like for this, you could probably do like an alert here at 18. I wouldn't touch this just yet. It's a little bit too weird. Okay, so let's see. Act. Let's check out Act. Ooh, interesting. Huh. Oh, wow, Taz. You give me things I love. I love seeing massive sell-off candles like this. This is great. Oh, this is so funny. It's so funny. We got a range low taken. Oh, shit. Daily. Oh, shit. Oh, wow. Huh. Already have a low time frame. Oops. Already have a low time frame SMR right here. Right there. Right there. And but this is 4 hour bearish. Oops. Why am I just pressing buttons by accident? Sorry. Yes, here we go. This is a little balanced. Yeah, so for this, we have a range. This is not, this is pretty balanced. I would say this is pretty balanced. The thing with this though is that considering how balanced it is, uh, yeah, we would be, the daily looks bearish, the weekly looks bearish, the low time frame looks slightly bearish, slightly. Um, yeah, maybe we break the low here. Yeah, but that's the problem with this one specifically. It's a little iffy. This range down here, this just rebalanced, right? We just completely rebalanced this range. So honestly, this could go either way at this point. It's really good. It's really good if we happen to reclaim the range like previous ranges. But right now, this is a total gamble, right? Based on how balanced this range is. Look, we draw the 50%. We're hovering. We're hovering right under it. Right under it. Look at that. Right under purple. If anything, we're supporting bearish delivery because we took OTEs from the other side first. So I'm leaning bearish. I'm leaning we break the low here first. Yeah. What else? Check out Flog. Oh, oops. Yeah, so for Flog, we did rebalance on the high. So I'll clean this up a little bit. I want to see, we do have, oh, interesting. This is a bearish SMR on the high time frame. This is another, oh my goodness, another perfectly balanced structure, right? You look at this, you see between the two white lines here, we are basically between hovering under the 50%. So if we wick down first, slightly bullish, but again, I would not take, yes, Mowgli, you're right. The RR for longs is going to be absolutely phenomenal, absolutely insane. I think, though, the market is basically doing a weird thing right now where it's rebalancing itself slightly higher than the previous lows, but it's still bearish. Like the high time frame is still bearish, like I mentioned before. USDTD, we have not taken 7% yet. So technically, on the high time frame, we have not bottomed out on the market yet. We're just rebalancing slightly higher. And if we rebalance slightly higher again, all that means is going to line up for even more shorts on the high time frame, right? More shorts. Or like very tight risk longs. Once we start to see, I would say once we start to see 7% on USDTD, that's when you can load up on spot again, and that's when you can load up on longs again. But it is a weird spot we're in right now. I was kind of bullish. I'm still kind of bullish. I think we're gonna kind of push, but it's like, yeah, I didn't like how the week closed because we closed bullish even though I wanted us to close bearish and then be bullish. Um, yeah, so now it's yeah, basically either tight stop longs or wide stop shorts, kind of what I'm thinking. But eventually the market's going to shift to being tight stop longs again or tight stop shorts again, right? So I would say with fog, playing the bias for fog would be that we manipulate the highs again, right? We're rebalancing here. We manipulate the highs one more time. So fog goes into the high, probably on Tuesday, right? Tuesday, high of the week, Tuesday. That'll be a bearish high of the week. If we go higher from here on Tuesday, that'll be our shorts. We short from the highs and then we bring it back to the lows. And then this is the most obvious long, right? We have an incredibly good consolidation on FWOG. We already confirmed this is a weekly close. We already confirmed a weekly close back in range right here at when we closed at, and I have it marked. Have it marked in this. I'll make it yellow, or I'll make it orange, different color. red. So you see how we closed this week? We closed this week right at 402. We closed it right at 403, and guess what? We needed to close right at 403 to be bullish to confirm the all-time low. So FLOG, in my mind, I think has already confirmed its all-time low. So even if we do sweep, if we manipulate the highs first, which I would like to see a bullish Tuesday. Then when we retrace, this will be a very, very, very obvious long. And there's a few others like this as well. I mean, I was looking at this morning, but Hype, very similar structure. We close back in range. What we want to see here is we want to see this day. We want to see this day, the next Tuesday, the Tuesday come in to be bullish, and then bearish into the rest of the week, right? And then if we get that, so something like here, I'll draw this up a little bit more. Yeah, something like here. Here's our 8-hour right there. We have an 8-hour inversion PDA right there. What we want to see, so here's an example, another example. Same thing, same structure roughly as FOG. We want to see this manipulation to the high, and then we want to see closures back in range for 17, for all the way back to OTEs, roughly around 12 to 11.5, and then closures back in range, and then basically new range high from there, so roughly like 22, right? Something like that. So there's Hype, and that's another really good one. So same thing here, says FOG. Like every single one is showing this signature now, which is great. I'm glad that like when I look at charts and I see different things on different coins, I get worried. unless it's like a you know, a weird some coins don't really follow the market completely. But in most cases, you know, if I'm seeing the same thing on multiple coins, that's great confluence. So in this case, I would expect something like this to happen for Hype. So that's another reason why we're doing wide stop short on Sol, because if we push up on Sol, I'm just going to keep adding to the short probably on Tuesday. And then because it's wide stop, we're 5x, we're fine. We're going to, you know, relax and just hang with it. As soon as we push up, I'll add to it a little bit more, and then we start the descent. When we start the descent, I'll keep adding to it until we close back in range, and then I'll add to it one more time till we bring it back down. And this is Sol, right? So I'm looking at a different chart. I'm explaining to you what's happening, right? So exactly the same thing, right? We wick this high somewhere, you know, somewhere in here between the orange lines. So I'll delete these to clean this up. Assuming orange is our play, we basically keep adding to it between up to like 142, you know, run 42-ish, yeah, somewhere around here in this zone. And then if we wick into it, then we start closing. Once we start closing back in yellow, then we continuously add. Because the high time frame would mean that we are not making a higher high, right? We're not breaking structure, and we're basically going to sweep the lows pretty heavily. So hopefully that answers your questions too. So I will take one more. I have to go soon. It's been a great time, but I will do ADA. So ADA I did a while ago. ADA is sadly, ADA is like, this is a while ago. This is old. ADA is a little weird because of this wick here. This sell-off here, this wick, we basically cleared the entirety of this range. So I'm going to clear this up, right? So the new range high is now here. It is one of the most bullish coins on the high time frame for sure. Incredibly bullish, incredibly. I think there's going to be, and this is, and I'll show you right here. I'll clean this up. We just look at this chart here. We just barely dipped into this quarterly inversion right there. I might look to do something with ADA soon. This is actually a quarterly SMR down here. Let's check this. Actually, let's check this. Let me redo this real quick. I think I did these levels a while ago, so let me redo these. ADA is insanely bullish here too. If this SMR holds, this is going to be great. 1, 2 OTEs there. Let's check. Yeah, it looks like we just basically we wick this low. We barely just wick right through this low, and then this is going to become a springboard. Yeah, basically, we're just going to become a springboard. So something like this, right? Let me draw this up. There's so much liquidity down here, it's insane. So it's going to be like this. It's going to spring. It's going to, even if we push up a little bit, again, we're slightly bearish, right? Tuesday high of the week, even if we go up a little bit, it doesn't matter if we go up to 0.7. We're going to sweep down, take all this liquidity, possibly all the way down to like, I don't know, 35. We could wick all the way down here, to be honest. But as soon as we do that, we're going to close back into range, and then it's going to rocket so fast, so hard, it's going to melt everyone's face, right? Because this is a quarterly inversion right here. We're about to sweep into the quarterly inversion. So that's kind of where we see it. Now it could go to like 47 cents, or it could go to 35. Again, we don't know for certain, but it'll sweep, and it's gonna just totally melt faces after that sweep. So yeah, I mean, if we're going based on ranges here, I think like let's check the daily here. I mean, what we could do if you guys are feeling a little adventurous for this one, we could just take it from every single IOFED entry on every single IRL in the daily plus the flat right here. There's a flat on the daily right there. But effectively, the goal here is we want to accumulate as much. So when I tell you guys, like, when we see this next capitulation wick, it's going to be aggressive. It's going to be heavy. Everyone is going to sell. Everyone is going to be selling. The wick is going to go an impulse. It's going to sweep so much liquidity so fast. But I'm telling you now, that is the time you start buying, loading the boat, load your boats, because that wick will bounce up so fast on the quarterly. We're going to make new all-time highs after that, right? So easily probably one. So because again, we're going to be reflecting this range. So going down here, here's the new range right there, right? Right up here, same thing happens, and then we continue, right? That's ADA right there. I'll leave this up as well. But a lot of coins are going to do this. A lot of them. ADA is one of them. Pretty much every single one, almost all of them are going to be doing this. So just just be ready. Again, you don't need to capture all of them. I'm capturing a few, like Yearn. I might add a couple more, Yearn and a few others. But you know, ADA looks good. H bar looks good. H bar looks absolutely stunning. Absolutely stunning. We could just basically, I want to see us wick through 11, possibly all the way down to like 6 cents on H bar. You see the yellow, basically yellow, right? We go down to yellow, 6, 7 cents. I might just put orders down here, to be honest. That's probably the best bet because this is previous range lows. And then because as soon as we fill those, what'll end up happening is we start closing back in range, and then we go for the third extension. Third extension on H bar brings all the way up to $1.25. So for H bar, this one's going to be absolutely phenomenal as well. And then we're going to start a super cycle on a lot of these altcoins are going to start super cycles. So like, for example, H bar, this is going to be the first extension. Third extension easily lands us at like $2.30. And we're not even close to that yet, right? So, but we need to sweep all the liquidity out from where we are now. But yes, 8248. So I'll put these. Yeah, H bar is good. I'll put these limits in. I'll post this up later. These are just, keep the limits open, expect to have them filled. They might even go red, but you just got to make sure that you got to hold and wait, right? Simple as that. Hold and wait. And then you'll get into tripling your account in no time. So yes, hopefully that answered your guys' questions. Is there anything else you guys are looking at? I'll do a couple more minutes. Last call. Velo. Okay, last one, and then I gotta run. Okay, so I actually haven't done Velo in a long time. I'll clean this up. Oh, look at that. Velo. Ooh, look at this. This is a incredibly bearish SMR right here. Incredibly bearish. And a quarterly open gap. This is a pretty bad sign. I'll say that much. This is our quarterly. There's our quarterly range here. Here's the monthly. And here is the monthly inversion open. Weekly. And we have another weekly open up here. And then we have our high. And we have, I'll mark the actual OTs from the actual range here. Perfect. So it still looks like we're going to have a major pump. That's weird. Would you look at that? I mean, this is funny. This is just funny. Like I just don't even know what to say. Like even if for this one, this is like this is gonna be a manipulation pump. Oh my goodness. Oh, smooth liquidity all the way through. Holy shit. Excuse my French. But really like possibly something like this. And then re-range, right? We want to basically recreate a range, something like this. We take the high. If we take the high and then rearrange, then I would expect the low to also be taken, right, down here. So red, green. So it'll be blue, teal to green, right? There. So blue, possible rejection points there. And then, so maybe I am a little bullish. I'm a little bullish, but I'm bullish in the manipulation sense. So yeah. Yeah, maybe slightly bullish now on this one at least. I want to see this high taken, and then a retest from this range right here, right, something like that, and then we blast off. But then that is the low, right? That is, and then it basically just creates a new wider range, right? Takes the low from there, and then we do that, and then we rebalance this range. Then what'll end up happening is the same thing will happen again, but the range will end up becoming higher. So as soon as we take this one, right, we'll basically just do the same thing again, like that, right? Until we can break and mount this. We need a break and mount basically up to 28. So I'll leave that on. Velo, this is a weird one. But I mean, yeah, I could see it breaking and mounting. Oh, fart coin. Okay, let's check that real quick, and then I gotta go. So fart coin here, I am getting ready to short. We are entering levels. I haven't posted this one yet, but I am watching it. I am not putting limits on this one, but I want to see a rejection basically in this zone right here, right? So we need to see that's our short zone between $1 and $1.15. This is going to be the range where we look for consolidation, and we want to see, I'm not going to do limits here, but what'll be amazing is once this is such a large range on the 8 hour and the 12 and the 4. The good news about this one is that once we start to see it even breaking a little bit, even if it breaks down a little bit, we can take a very, 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 very high RR short against the breakdown on like the 4 hour, right? Because it'll be going back down to yeah, at the very least they'll be going back down to 60 cents at the very least down here, something like that. Yeah, this is already a market maker buy. So honestly, yes, we want to see some range here build out. I don't want to short it until we range above $1. So hopefully that answers your question. Cool. Well, thanks again. I'll stop the recording there.